Welcome to Allenberry Reports TV. I'm your host, Allenberry Labucan from allenberryreports.com. So the title I put on today's show is Please Don't Follow the Crowd. And one of the main reasons is it's a great recipe to lose money. You know, I've been following the markets for 25 years or so. And one of the biggest lessons that I've learned is how often the crowd is wrong, and how by following the crowd you tend to lose money that way. You know, and the leaders of the crowd often are those that are in the media, and you know, they talk about, I think part of the reason that they talk like that is because you know, they got to fill up airtime every day. And you know, whatever drama's going on each day is something to talk about. So I kind of get where the media is coming from, but that doesn't mean that you have to follow the crowd. In fact, yesterday was a perfect example. Following gold, you know, yesterday gold dropped about $50 an ounce. Other commodities came down as well, and nothing really changed with the fundamentals of those of gold or other commodities. But what happened was, you know, gold fluctuates by a few percentage points, and sometimes I can see gold stocks and other commodity stocks just get hammered, sometimes 10% or more. And you know, nothing has changed with the fundamentals of supply and demand for gold from day to day, nor did anything change with the discoveries or deposits that these companies have. But you know, people were willing to just throw stocks away and give them up for bargain prices. And you know, one of the things that we've really tried to do over the years with the Allenberry Reports is to try and help people to understand the fundamentals of, for the example of gold. You know, what ultimately moves gold. I know there's a lot of commentators that'll talk about political turmoil and currency. You know, it's an alternate currency and a bunch of other reasons. And really, the bottom line is it's about supply and demand. You know, if all of those other reasons were happening and the price and there was abundant supply, the price wouldn't go anywhere. The reason that gold has been on a 10-year bull market is because there's the supply is weak and the demand is strong. Now, if you look at some of those reasons are reasons that people do buy gold, but even then, I think that the market, all these experts, and I think they get it wrong. You know, at the end of the day, the biggest buyers of gold are China and India. I just heard some expert the other day talking about reasons that he couldn't buy gold because he can't figure out the intrinsic value. Well, I hate to tell you, here's the intrinsic value. There's not enough of it, and the two fastest growing economies in the world, the people of those economies, they love to wear gold and they love to own gold. Do you get that? There's your intrinsic value. I don't care how you want to look at intrinsic value. That's the bottom line of what moves gold. So, you know, and then to see, so yesterday when gold got beat down a few percent, nothing changed with the supply and demand from the previous day or today. You know, today gold's up. Yet, unfortunately, people that own some really good gold stocks yesterday sold them for 10% less than what they were worth the day before. And, you know, so they ended up losing money. And that's a great way to get whipsawed. Whipsawed means that, you know, you see you trade on emotional reasons. So the stock's getting hammered down. Something must be wrong. Sell your stock. Then today, that same stock is up 5%. So now you got to buy it back. Well, tomorrow, if something happens and gold gets hammered again and the stock comes down, then you're going to sell it. The only one who's making any money off of that deal is your broker. You're losing money the whole way. And what I've really tried to do over the years with, it's not just, in the case of a gold stock, you also got to understand what's going to go on with gold. But you also have to understand the fundamentals of what's going on with the gold company that you're investing in. And if you understand the fundamentals of the gold company you're investing in and the gold, then I would hope that you don't make these kind of emotional momentum kind of trades, because at the end of the day you're gonna lose money, and that's why I focus so much when I'm picking stocks for my private reports that we sell on the website. You can look up above me there on the website at the shop section if you're interested. What I always focus on, and by the way, also I put out a lot of free reports from 2005 and onward, where I didn't charge for those reports, and I picked about 50 companies, and the formula has always been the same. I look at what is the drill rig telling me, because the drill rig is a great way to separate all the nonsense, all the hype, all the things that will make you emotional about a stock, and it helps you get to the reality. So if you focus on the reality, and then you find companies that have found something realistic, and you can get those at reasonable prices, that is a recipe to make money over the long haul. Like I said, we've been doing this since 2005. Over the years, I've picked a lot of really great companies. About almost 20% of the companies that we picked in the reports over the years, in the free reports, about 20% of them were ultimately taken over by bigger companies. The reason that they were taken over by bigger companies is because they recognized later on down the road what we recognized early. And the reason that we've been able to pick early stocks before they've had these big runs and ultimately be taken over is because we focus on the fundamentals. And so that's one of the key things that I see all the time, and it really surprises me sometimes when I do see it. I see people it seems like they're in a hurry to give away really good stocks. It's hard enough these days to find good gold stocks or good commodity stocks. There's just not enough of them. There's not enough new discoveries. This is a real strong reason why we feel so strongly about the being bullish on commodities going forward, is because the pipeline of new discoveries and new production is dismal. You don't need to hear it from me. Go listen to any major mining company, and not just listen to them. Watch what they do. Watch where they cut their checks and what they pay for. The reason that they do that is because they know how hard it is to find new discoveries and to find new mines and to find new production. It's getting harder and harder and harder. Before 2005, for about 2 decades, there hadn't been enough money going into exploration to find new discoveries, to put new discoveries in the pipeline towards future production. This is why major mining companies have been cutting a lot of checks over the last 5, 6, 7 years, was because it is so hard to find them. So they had to cut checks. They had to buy other companies that found them in order to secure their long-term production. And this has been going on for a long time. Now, after 2008, I seen a sort of like the industry, the supply chain hit the wall again. What I mean by that is, after 2008, it's been harder and harder and harder to find new discoveries. Now, you don't just have to find new discoveries and companies with new discoveries in order to make money on gold stocks. Right now, there is a very, very bullish argument to be made because of the weakness of the supply chain of many commodities. I'm not just talking about gold. Copper, uranium, diamonds, oil. All of these things have long-term weakness in the supply chain. What the trick is to, I think now, the biggest play, 7 or 8 years ago, the biggest play was to go out there and find new discoveries. There was a healthy amount of them, and get in early, and you'd do very well. Nowadays, it's a different ball game. Now the ball game is to find the bargains, and buy them when the market is throwing them away. Like yesterday, nothing changed with the fundamentals, but some of these stocks were getting discounted by 10%. They're good companies. Don't sell good companies when they're on sale. Sell good companies when they're trading at a premium. When all those guys on TV are talking about how gold's going to the moon and they're all singing the same song, that's a good day to sell them. Sell them so that you've got money for the next day when those same guys are talking about how the end of the gold bull or the end of the commodity bull is over. And that's how in the future you're going to make money in these kind of stocks. And that's what we have been doing in our private reports. We're no longer giving away our picks for free. That's not a very good business model. We have to pay the bills as well, and that's why I started the paid reports a few months ago. And that's what we do in the paid reports. Sometimes sometimes in there we have companies that we've covered before, but we're recovering them again because there's trading at that discounted price again. They've got great projects trading at a discount. The market sentiment for some reason is, I think, wrong in a lot of cases, and so those are the kind of companies we focus on in the reports. And so just wanted to go on my little rant today about trying to avoid, please don't follow the crowd. It's a recipe to lose money really quick in the markets, and I'm passionate about this for a reason. Been doing it for a long time, trying to help people out to find good companies, and it really makes me sad when I see people giving away good companies at discounted prices. I hope that those that have been following what I do what we do with the Allan Berry reports for a long time, we're able to get in there and get some of those bargain prices. But if you were the one selling into a buyer's market, please don't do that. It's a great way to lose money, and we don't want to see our viewers and our readers make those kind of mistakes. So on that note, that's a wrap on today's show. As always, we aren't making buying or selling recommendations. It's important for you to do your own homework and speak with your financial advisors before making any investment decisions. We're always trying to grow our audience, and any efforts you make to let your friends that follow the markets know about our reports, we really appreciate you letting them know about that. And on that note, we hope to see you soon. Have a great day.